Hey folks, Burke here. Let's talk about the markets this past week, because they didn't just drift higher. They powered through noise, volatility, and tariffs. In fact, the S&P 500 closed above 6,000 for the first time since February. That's a big deal. It marks 2 straight weeks of gains and 5 out of the last 7. You want wealth? Own great businesses. This market is rewarding growth, especially tech, and punishing indecision. The S&P 500 rose 1.5% and the Nasdaq gained 2.2%. This was a clear risk-on week. Growth stocks surged 2.82, while value stocks barely moved. If you're still playing defense with outdated diversification models, you're missing the wave. Tech led the charge, up 3.1%. AI is the fire starter. Meta jumped 3.6% with news of AI-driven ad tools. Palantir hit record highs after a new government contract. Applied Digital soared 50% on a massive AI data center lease. Even real estate popped 2.7% as rate cut hopes re-entered the chat. Meanwhile, consumer sectors dropped. Both cyclicals and defensives fell 1.3%. That's a red flag for consumer health. We'll be watching. Trump doubled steel tariffs. Steel stocks exploded. Cleveland Cliffs plus 21%, Steel Dynamics plus 10.3%, Nucor plus 10.1%. Auto stocks tanked. Ford, GM, Stellantis all down 4%. That's margin pressure, plain and simple. And then there's Tesla. Thursday, it plunged 14.3% during a Musk vs. Trump feud. Friday, it bounced 3.7%. This isn't investing. That's personality-driven volatility. You need rules. We have them. The labor market added 139,000 jobs. Unemployment stuck at 4.2%. Wages up 3.9%. That's not booming, but it's not breaking either. Inflation? Core PCE, Fed's preferred gauge, is now at 2.5%, a 4-year low. The Fed meets June 18th. Odds are 97% they hold steady, but markets are sniffing a cut by September. Speaking of policy shifts, the European Central Bank cut rates by 25 basis points. That's a divergence. Europe easing, Fed waiting, currency volatility ahead. The week ended with a very good Trump-Xi phone call. U.S.-China talks are set for June 9th in London, but the tariff clock is ticking. Crude oil spiked 6.55%, hitting 64.75. Geopolitics, OPEC Plus, and Iran all played a role. Look, this rally is being driven by selective optimism. Tech, AI, and lower inflation are fueling it. But risks remain. Trade tensions, Fed uncertainty, consumer weakness. So, what should you do? Number 1, stay focused on businesses, not headlines. Next, follow your rules. And 3, if you don't have a rule playbook for this market, get one. If you got value from this, hit like, subscribe, and tap the bell so you never miss our breakdowns. It really helps us, and it helps more long-term investors like you stay informed. Have questions about your portfolio or strategy? Let's talk.